Hey traders, Desmond here. Welcome back to the IronFX podcast. Today we're talking about something that sounds boring, but it can literally save your account. A pre-trade checklist. Because here's the thing, most traders don't lose because they lack a strategy. They lose because they stop following their own strategy the moment the chart starts moving. They see a candle explode, they feel the fear of missing out, and suddenly their plan becomes a guess. Right? A checklist is how you take your emotions out of the driver's seat. Now, let me frame this with a simple analogy. Imagine you're about to drive a race car. You don't just jump in and smash the accelerator. You check the tires, the fuel, the brakes, right? The track conditions. Not because you're scared, because you're a professional. Trading is the same. The market does not reward courage. It rewards preparation. So in this episode, I'm going to give you a practical pre-trade checklist you can actually use, plus a simple way to score your trades so you stop taking low quality setups. And yes, we'll keep it real. A checklist won't make you rich overnight, but it will make you consistent. And consistency is what pays. Let's start with the purpose. A checklist does 3 jobs. Job 1, it forces you to slow down right before you click buy or sell. Job 2, it keeps you aligned with your edge, meaning the exact conditions you trade best. Job 3, it protects you from the 2 biggest account killers, impulsive trades and oversized risk. So the goal is not to create a 10-page document you never read. The goal is a short set of gates your trade must pass through. If it doesn't pass, you don't take the trade. No debate, no negotiating with yourself. Now let's build the checklist in a way that matches how the market actually works. I like to break it into 4 parts: market context, setup quality, risk and execution, and the trader, meaning you. Because the truth is, even a great setup can be a terrible trade if you're not in the right state. First part, market context. This is where most retail traders skip ahead, and it's why they keep getting chopped up. Context questions, right? Is the market trending, ranging, or transitioning? Now, this matters because breakout trades behave differently in a trend versus a range. Reversals behave differently when momentum is strong versus when it's exhausted. Ask yourself, what is the bigger picture doing? If you trade euro-dollar, are you in a clear uptrend on the higher time frame, or are you in the middle of a messy sideways zone? Next question, are we near a major level? Support, resistance, previous highs, previous lows, weekly zones, right? Because if you're buying directly into resistance, right, your trade is basically asking to be punished. The next question, what session is it? Asian session, London session, New York session? This matters because volatility changes, right? Follow through changes, right? Fake outs change. A breakout during a quiet session often has less fuel. A breakout during London can rip. Next question, is there major news coming? If there's a high impact event soon, spreads can widen and price can spike both ways. So you don't want to place a tight stop 5 minutes before a major release and then act surprised when you get tagged. Right? So your context gate is simple. If the broader market structure and timing don't support your style, you either reduce risk or you pass. Second part, setup quality. This is your do I actually have an edge here section. Here are the core questions I want you asking. 1. What is the setup type? Be specific. Is it a breakout, a pullback in trend, a mean reversion trade, a support and resistance bounce, a divergence play? If you can't name it clearly, it's probably not a setup. It's just movement. 2. What is the trigger? This is the exact condition that tells you now, right? For example, a clean break and close beyond resistance, followed by a retest and rejection, or a strong rejection candle at support with rising volume, or momentum shifting after a failed push lower. Whatever you use, your trigger must be objective enough that you can explain it to another trader without using words like it felt like. 3. What is the invalidation point? And this is where most traders mess up. Invalidation means if price reaches this point, the idea is wrong. Not that I hope it doesn't go there. Wrong means wrong. If you can't define where you're wrong, you're not trading, you're gambling. 4. What is the minimum risk to reward ratio? Risk to reward is simply how much you stand to make versus how much you risk, right? If your average winner is smaller than your average loser, you need an insane win rate just to break even. So set a baseline. For example, I only take trades that offer at least 1 to 2, meaning you risk 1 unit to potentially make 2. And yes, sometimes the best trade is the one you don't take because the reward is not worth the risk. 5. What is the confluence? Confluence just means multiple reasons pointing to the same idea. Trend direction plus level. Level plus rejection, momentum plus divergence. The more independent reasons you have, the stronger the setup tends to be. Not always, but generally. So your setup gate is clear pattern, clear trigger, clear invalidation, and acceptable risk to reward. If one of those is missing, you pass. Third part, risk and execution. This is where discipline becomes real because it's not enough to have a good idea. You need to size it properly and execute it properly. Question 1. How much am I risking on this trade? Pick a fixed percentage or fixed dollar amount. Keep it consistent. Most disciplined traders risk something like 1% or less per trade, especially when they are still building consistency, because the market will always be there tomorrow. Your capital needs to be there too. Question 2. Where is my stop loss? Not a random number, not somewhere below. It should be placed at your invalidation point with enough room for normal market noise. Question 3. Where is my take profit? Have at least a primary target based on structure. Prior highs, prior lows, measured moves, or whatever fits your system. Question 4. Am I chasing? If price already ran without you, and now you're entering out of fear, that's not execution. That's emotional damage. A good checklist question is, if I miss this trade, am I okay? If the honest answer is no, you're not in a clean mindset. You're in scarcity mode, and scarcity mode makes you do stupid things. Question 5. What is my plan after entry? Will you move stop to break even at a certain point? Will you scale out? Or will you keep it simple and let the trade play out? The worst thing you can do is improvise mid-trade because your feelings changed. So your execution gate is fixed risk, logical stop, logical target, no chasing, clear management plan. Fourth part, the trader, meaning you. This is the part most people ignore, but it's the real secret because your state is part of the system. Here are the questions. Am I calm right now? Or am I trying to win back losses? Right? Am I tired? Am I distracted? Did I already take my maximum number of trades for the day? Remember, if you're angry, revenge trading is right around the corner. If you're exhausted, you'll start cutting corners. If you're distracted, you'll miss obvious information like entering right before news. So create a simple rule. If you answer yes to any red flag question, you either reduce risk or stop trading. That is discipline, not forcing trades, protecting your decision making. Now, let me give you a practical example. So this isn't just theory. Let's say you're watching euro dollar. You notice price has been trending higher on the higher time frame, making higher highs and higher lows. On the lower time frame, price pulls back into a previous support zone that also lines up with a moving average you respect. Context looks good, trend supportive, level supportive, session is London, so liquidity and follow through are more likely. Then you wait for the trigger. You get a rejection candle off that support, and the next candle confirms by pushing higher. Now the invalidation point is clear. If price breaks below that support zone and holds, your idea is wrong. You measure your stop based on that invalidation and you check the target. Right? There's a prior swing high above that offers at least 1 to 2 risk to reward. Great. Now risk, you decide to risk 1% on the trade. You place the stop, you place the target, and you already know your management plan. If price reaches a certain structure point, you may reduce risk, but otherwise, you let it play out. Now here's the key. If the setup does not trigger, you do nothing. If the risk to reward is not there, you do nothing. Right? If news is coming in a few minutes, you do nothing. Right? That's what separates traders from gamblers. All right, let's make this even more actionable. I want you to score your checklist. Yes or no questions are good, but scoring forces honesty. Here's a simple scoring framework. Give each section a score from 0 to 2. Market context. 0 means messy. 1 means acceptable. 2 means ideal. Setup quality, same idea. Risk and execution, same. Trader state, same. So your total score ranges from 0 to 8. Then set a rule like this. If the score is 6 or higher, you can take the trade. If it's 4 or 5, you can only take it at reduced risk. If it's 3 or lower, you do not take it. No exceptions. This turns discipline into math, not mood. Now, I want to address a common pushback. Some traders say, but won't a checklist make me slow? I'll miss moves. Here's my hot take. If your edge disappears because you took 20 seconds to confirm it, you didn't have an edge. You had luck. Real setups give you time. Even fast breakout traders have a process. Level, volume, close, retest, trigger. And the beauty of a checklist is it helps you miss the bad trades too. Because the bad trades are the ones that look exciting. They're the ones that spike, reverse, and slap your stop like it was nothing. Those are liquidity traps, and a checklist is your trap detector. So let's wrap this up with your practical assignment. Keep your checklist short. Aim for around 10 to 15 questions total across the 4 sections. Print it, Put it next to your screen or paste it into a note you can't ignore. And here's the real secret. Do not just use the checklist before entry, right? Use it after the trade as well. If you broke the checklist, write it down, right? Because the goal is not to be perfect. The goal is to reduce unforced errors. Over time, fewer unforced errors equals fewer stupid losses, and fewer stupid losses equals consistent equity growth. Discipline is not a personality trait, it is a system you build. All right, traders, that's it for today. If you want, I can also share a ready-to-copy checklist template. You can adapt to your strategy, whether you trade breakouts, pullbacks, or reversal, right? Until then, trade safe, keep your risk tight, and let your process do the heavy lifting.